Good morning, trading world. It is February 17, 2022, 8:27 a.m., and this is my pre-market outlook and technical analysis for day trading the SPY. Excuse me. The title for today's outlook is The Good, the Bad, and the Ugly. Or in our case, the tech, the Fed, and the debt. We had a Fed's minutes release yesterday. The market seemingly shrugged it off on the surface, or at least for the moment. Thinking about the Fed and its relationship with tech and debt makes me think of the good, the bad, and the ugly. The old Western, or every time they compare one of these award shows, but it just made me think of that. As the Fed moves to raise rates and shrink the balance sheet, let's explore these relationships. Over the past 10 years or so, if you wanted to make money in the market, you just about had to be involved with growth companies. And a high percentage of those type of companies are in the tech sector. Most of these growing companies don't pay a dividend and are not exactly profitable yet. So how do they survive? They borrow heavily to fund R&D or operations with the hopes of becoming profitable. Over the past 7 to 10 years, money has been relatively cheap to borrow, and the last couple of years, not only has it been cheap, but super plentiful. Lots of liquidity in the system. It's been pretty easy to operate when money is about free and so plentiful. You can do things like fund R&D or borrow to buy back shares because money has been basically free. The good to me has been tech and the growth sector, with all the innovations that have came out of this. The bad is the Fed, because they've let this go on way too long. The ugly would be all the debt that has given us a false way of operating that will no longer be able to continue in a rising rate environment. The market is stretched to within a dozen points of its capacity. We keep trying to stretch for more, and there is going to be a huge snapback soon. By my estimation, probably the end of the month or the beginning of next month for the SPY. The making of this huge snapback is not instant, but the signs are here. We will see awkward snaps in both directions. A hard-fought drag uphill higher with quick drops back to where it started. And then a break-free moment to the upside, only to be met with another break-free moment to the downside with the same energy or more to the downside. And that would follow soon after the break-free moment to the upside. So I just wanted to kind of, get that off my chest from a lot of things that I've been seeing in the market lately. It's not all doom and gloom for me, because each day I try to come in and trade what I see, whether bearish or bullish. And so as a trader, if you recognize opportunity, no matter what direction, you don't really look at it as good or bad. You just look at it as another trade. So with that being said, let's get to the key levels of the day. All right, here we are with the key levels of the day. Starting on the resistance side, we have jack resistance at 446 through 447 area. Queen resistance is going to be 448 through the 451 area. And king resistance is going to be 452 through 454 area. On the support side, we have 444 through 443 area as the jack support. Queen support is going to be the 442 through 441 area. And king support is going to be 437 through 435 area. The key question today, and probably for the next week or so, is can we break the 447 area one more time, or is this it? There's a lot building right here at this 447 area. So I'm anxious to see whether we can break it or not, because if we break it, this is basically begin into a huge short squeeze to where if we don't break it, we get knocked back down. If we break through it, we're going to have an immediate pop toward that 448 area. So that's going to be key in the upcoming weeks. The main thesis for today is bullish, closing above 446.60 with a projected high or possible target of 451, 453. With the way things have been going at the 446, 447 area, the way I'm doing it, if I decide to do anything long during the day, I am definitely taking off half the position at this 447 area. And waiting to see with a runner if we can break through and continue further. But this is definitely an area of contention where you want to, if you are in positions and you have something profitable, once you reach here, you definitely want to take some profits. The alternate thesis is bearish, closing below 446.60 with a projected low of 440 down to 439. The current minor channel we are in is 453 down to 443, with the major channel being 453 all the way down to 425. The scenarios for today, we're basically in the same place we were yesterday. Same possible outcomes. Let me bring those up. All right, going into the scenarios. The first two scenarios are pretty much neck and neck. It's going to be hard to differentiate between the two today. So they're basically interchangeable. And the way that I'm looking at things, it may be only possible to know the difference between the two at the end of the day. Usually within the first 15 minutes of the day, we can pretty much plot and know what type of day we're going to have, at least the first 15 to 30 minutes. But with the conditions that we're in, it's going to be very hard to figure it out. But it's possible that they're going to play the exact same way up until the end of the day. And the difference between one of the variations of an expansive range day and a trend down day is basically the previous close and where we are in relation to that close. On the expansive range day, we're going to look to cross that close at least once, closing above it because we're below it now gets us into the mindset of a range day. So on this first scenario, the expansive range could pretty much play out where we could look to set a decision area, which would happen probably before market open, but set a decision area around the jack resistance area before chopping lower, then a possible try chopping higher before going lower again and reaching our midday chop area. And in the second half of the day, we find this powerful trend to get us up back above yesterday's closing price. And that pop above yesterday's closing price will put us, will score us basically as a range day. So that's the first scenario. Also remember, range days are very difficult to plot because there are so many different variations that could happen. So many different things that could take place. So we have to basically watch the indicator and depend on convergence with the indicator, or moving in harmony with the indicator at these decision areas to trade the range day type structure. Now the vice versa on the range day or expansive range day could go as such, where we could pop to the top first, come down, another try up, and at some point go back across the previous close. And what should be happening here, or what I see taking place, is some type of squeeze or wedge pattern leading us to a breakout at some point. So that's the expansive range day. That's the things that I will be looking for or planning for the range day type structure today. Let's move on to the next scenario. All right, here we have the next scenario, which is our trend day down type structure. We open gap down from the previous close, and we start just after the opening with an almost rally of some sort, trying to fill the gap and make it back toward yesterday's close. And on a trend day type structure, usually somewhere on or before we reach the previous close, we find resistance and reverse. And that's where we'll reach the strongest trend of the day during that morning. Sometime around 10 and beyond, we'll get into this downtrend, taking us to our queen, possibly king support area, finding our midday chop zone, then starting the second half of the day with possibly a head fake to go further down, but somehow finding a way to kind of come into a rally at the end of the day. So that's the trend day structure. Again, these two, between the expansive range day and this trend day down, it was hard to, the percentage or probabilities was almost even for these two day types today, and the only difference is going to be the end of day, seeing how much ground we can make back up. Whether we close above the previous close, which would deem us the range day, or below the previous close, which would deem us the trend down day. All right, the last scenario is our rounded reversal day type. We get this continued fall coming into the cash open, where we continue towards either our queen or king support area, where we'll reach our midday chop sideways. And the important part about this day is that you can identify it by the continued momentum through the opening and the divergence of your indicators, volume, and internals. If we have down price action, look for bearish volume to diverge. So as price action continues lower, bearish volume doesn't strengthen with price, but it continues to get lighter and lighter itself. And then the divergence here with your indicator, as we're going sideways through the midday chop, it's possible that you'll see your indicator building a divergence here. So those are the things that we're going to look for to determine the day type. So the rounded reversal is the lowest probability of the day, but we must be on guard because of all the geopolitical stuff that is going on, because it can take a hold of the market in a snap. So we have to be careful with that, and as always, having to define our risk, because we're in market conditions where anything can happen at any given time. So you have to be comfortable with any amount of risk that you step out with at any given time right now. So I hope this helps. With that, I'll end today with wishing you a successful trading day. Have a great one.